Every year, a nation's budget is way more than just a spreadsheet of numbers. It's really a glimpse into its soul. What it prioritizes, what it's worried about, and what big bets it's making on the future. And for India's 2026-27 union budget, the challenge is just massive. How do you navigate a world full of uncertainty while also fueling the dreams of over 1 billion people? So let's unpack this huge balancing act and see what it tells us about where India's headed. And yeah, this cartoon just nails the core problem, doesn't it? On one side of the scale, you've got all the domestic needs. We're talking infrastructure, jobs, social programs. And on the other side, you've got these global headwinds. Supply chains are a mess, there's geopolitical tension, prices for everything are volatile. The entire budget is basically an attempt to keep those scales from crashing down. So how is the government planning to pull it off? Well, the government's strategy is built around a framework of 3 core duties, or as the finance minister called them, kartavyas. Think of this as their official blueprint for walking that high-wire act we just saw. So what are they? First, you've got to accelerate the economic engine. Second, you invest in people, their skills, their well-being. And third, you make absolutely sure that the benefits of all that growth actually reach everyone. It sounds simple, but it's an incredibly ambitious 3-step plan. Let's dig into what each of these steps actually means in practice. Okay, so duty number 1 is all about building the economic hardware. This means a huge push in key manufacturing sectors, pouring tons of money into infrastructure to make it easier to move goods around, breathing new life into old industrial areas, and trying to create small and medium businesses that can compete on the world stage. In a nutshell, that's about upgrading the country's entire operating system for the 21st century economy. Now, if the first duty was the hardware, this second one is like the software update. It's all about investing in people. The focus here is on getting the workforce ready for the modern services economy. We're talking everything from healthcare and the massive potential of medical tourism to the booming animation, visual effects, and gaming sector. It's a clear bet that India's greatest asset is its people. And the third duty is all about distribution and making sure growth isn't just for a select few. This means specific programs to raise farmer incomes and empower the disabled. But what's really interesting here is a new and pretty significant focus on access to mental health care. That's a recognition of a critical piece of public well-being that's often been overlooked. Okay, so that's the big vision. But a budget is nothing without the numbers to back it up, right? So let's get into the bottom line and see where the money is actually going. First up, Capital Expenditure, or Capex. Now, this is the money spent on creating long-term assets. Think roads, ports, railways. At 4.4% of GDP, this is a huge commitment. The idea is that when the government spends big on infrastructure, it encourages private companies to invest too, creating this powerful ripple effect through the economy. It's a loud and clear signal that building for the future is the #1 priority. Next, check out this number, a massive jump in defense spending, up over 15%. In a world that's getting more and more tense, this reflects a pretty sharp focus on national security and on modernizing the country's armed forces. And here's the fiscal deficit target. In simple terms, this is just the gap between what the government earns and what it spends. A target of 4.3% is meant to show that they're serious about being financially responsible. But of course, to balance the books, you need to bring in more money. And to do that, the government made a pretty big and controversial change to a very specific tax. And that tax is the Securities Transaction Tax, or STT. Basically, it's a tiny tax you pay every single time you buy or sell stocks or derivatives on a stock exchange. And this year, it got a major shakeup. And wow, when you look at the numbers here, the size of the increase is pretty startling. For futures trading, the tax more than doubled. For options, it jumped up by 50%. Now, these might look like tiny little percentages, but if you're a trader making thousands of transactions a day, this adds up really, really fast. Let's make this real for a second. For a trader who's just dealing in a single lot of Nifty futures, the tax on that one trade just shot up from around 325 rupees to over 800. The bottom line here is this makes short-term, high-frequency trading a whole lot more expensive. And as we're about to see, that had an immediate and powerful impact. So, how did this whole mix of a grand vision and these very specific tax hikes actually land? Well, as you might guess, the reactions were instant and they were all over the place. On the political front, the perspectives could not have been more different. The Prime Minister framed the budget as one that reflected the dreams of young people, while the leader of the opposition called it blind to the country's real problems. A classic political clash. And in the business world, major industry bodies like FICCI were pretty positive, calling it a balanced and credible budget. But that optimism wasn't shared by everyone. In fact, one very important group sent a very clear and very immediate signal of their disapproval: the stock market. On budget day itself, the Nifty 50 stock index dropped by almost 2%. That is a significant fall, and it shows immediate, widespread disapproval from investors. So why the sudden panic? Well, it all comes back to that STT hike. The market was completely blindsided by it. The higher transaction costs directly eat into the profits of derivatives traders, and these traders are the ones who drive a huge amount of the daily volume in the market. Now, the big question is why the government did this. Was it just a simple way to get more tax revenue? Or was it a deliberate move to try and cool down what some people see as excessive short-term speculation? Either way, it sent a shockwave through the trading community. So let's take a step back from the immediate market reaction for a minute. What's the long-term story this budget is trying to tell? What's the really big bet that India is making on its own future? When you look closely, this budget is just packed with these huge, forward-looking moves. A massive investment in biopharma, a second phase for the super important semiconductor mission, a strategic push to secure rare earth minerals, and a giant tax break to try and make India a global hub for data centers. These aren't short-term fixes. They're foundational bets meant to build the industries of tomorrow, starting today. And that right there, that reveals the core philosophy of this whole thing. This budget makes a very clear choice. It's prioritizing long-term structural growth, building factories, roads, and high-tech industries, over short-term relief measures like broad tax cuts or cash handouts that might boost spending today. And that really leads us to the final critical question. In a world that is so volatile, with so much economic uncertainty and immediate pressure on people's wallets, is this big bet on the future the right one for India? Whether this great balancing act ultimately pays off, well, that's a question only the future can answer.